Hi, thanks for tuning in. You're watching Ask BQ, a show where all your stock market related queries get answered. I'm Smriti Chaudhary and with me is Alex Matthew. Before we begin, I'd like to remind you that you can send in all your questions through the YouTube live chat or through the WhatsApp number that's flashing on your screen. You can also send in your questions through any of our social media channels. Now, let me introduce you to our guests for today. We have with us Mr. Pankaj Pandey, Head Research ICICI Direct, and Rajesh Palviya, Senior Vice President, Technical and Derivatives Research at Axis Securities. Welcome and thank you for taking the time out. Now, before we jump into the questions, Alex, what is the BQ focus for today?
Well, as we like to do, Smriti, on an ongoing basis, we like to start the show with a stock or a group of stocks that is in focus. And today we've chosen to take HDFC Bank because it's going to be posting its results for the second quarter. And this is going to be the first quarter where they have the merged entity that will be reporting the numbers. Of course, in the last quarter, you had provisional data that was out. But a lot to talk about because this counter over the last few months, since it started trading as a merged entity, has lost over 11.5%. Some of that also has to do with question marks about the ROA, with question marks about the asset quality, which is expected to deteriorate a little bit, and also the net interest margin, which is expected to contract. Some of that has already been disclosed by the bank management. So to talk about this in more detail and to understand what you should do as an investor, let's go across to our experts for the day. Pankaj, I'll come to you first. What have you made of all of the statements that have so far been made by the bank? Is that priced in when we talk about this 11.5% decline since the merged entity started trading?
So, hi, good morning, Alex. Thanks for having me. I think HDFC Bank historically has been known for delivering very stable set of numbers without much of a volatility. Now, when you sort of anticipate near-term volatility, obviously that also gets reflected in the price performance also. So, which is what we are seeing in terms of a double-digit kind of a decline in terms of price performance. Now, our sense is that this volatility is going to persist for some period of time on a merged basis. So while, say, for example, credit cost is expected to be about to sort of normalize to 80, 90 bips, which has been the sort of a historical range. Currently, it's lower than that. Then NIMs are also sort of expected to sort of decline from 4.1, 4.3% kind of a range to a bit lower levels. Now, HDFC Bank is undertaking a lot of capex in terms of branch expansion. Plus, when you look at the business updates, while the advances growth quarter on quarter about 5% is largely on expected lines, I think the deposit growth is still sort of challenging when you look at a lot of it is happening through the fixed deposit route, which is a slightly higher cost. And I think ROAs are expected to sort of improve to 1.8, 1.9% in FY25. So while our previous target has been 2050, we continue to sort of maintain by. But I think near-term underperformance or the price decline, what you're seeing is because of the anticipated volatility in the next few quarters in terms of how this margin would sort of play out, plus also on the credit cost and along with ROAs. I think people are used to seeing very stable set of numbers, consistent numbers from HDFC. And if you're not getting that, then obviously it results in price performance. Now, another thing is that we also need to look at global macros. So they're still soft. You are still seeing FI selling pressure continuing. That is largely in the large caps. And banking is one of the heavyweight sectors which takes the maximum brunt of sell-off, and which is where I think HDFC Bank is sort of underperforming because of these combination of factors. And I don't see that changing anytime soon. So I think business update has already come in. So you really are not going to see big surprises unless something there is there in the details.
Fair point. So what is an acceptable level for you, Pankaj, then on the NIM and on the asset quality? And then the advice from the perspective of the valuations. I think a lot of our investors will be holding on to this counter. So if they are holding, should they continue to hold? Should they add on dips? And if they're not holding, is this an opportunity to buy from the prospect of expecting that in a couple of quarters, perhaps once things stabilize, then the path or the runway for growth is there?
Absolutely. I think these are good levels to sort of buy into. Our sense is that once this volatility sort of subside, I think this will be one of the stocks which should deliver good set of numbers. And I think overall, when we sort of look at banking and financial services space, that hasn't sort of done well. And I think there are a lot of triggers for this to sort of do well. One, the private sector capex is looking to sort of go up. Then I think bond inclusion also will sort of free up a lot of, or will sort of reduce the crowding out effect in terms of bond issuances. So I think a lot of factors which are structural positive for banking as a overall, and I think HDFC Bank. Our sense is that overall things are going to get a lot more better valuation wise. I think within tier one banks, it's relatively attractive now. So I think everything is in place for this stock to do well. But like I said, it is not. We would not expect that price performance to sort of immediately start. So I think people will have to wait it out for some period of time before the number sort of stabilizes.
Wait and watch on the fundamentals. On the technicals, though, Rajesh, what are you picking up? What indicators are you looking at? And also, what are the thresholds, key numbers, or key price points to watch out for?
Good morning. So, in last 3-4 quarter, nothing has been delivered in terms of price behavior of the stock. Stock is in broadly consolidation range. Lower band for this consolidation is at around 1450, and on the higher side, the major supply zone for the stock is at around 1600 kind of zone. Looking at the near-term, short-term setup, stock is still in weakness, showing the weakness as stock is trading below to all its short-term, medium-term moving averages. So that is adding up the bearishness in the stock on the near-term basis. If we look at the very near-term setup, like for trading perspective, its stock is now trading near to its very critical support area of 1500. If at all stocks slip below to that level, then possibly further follow-up selling we can see in the stock, and it may go down towards 1460, even 1420 level on the downside. Looking at the derivative data front, also the major call writers are still aggressive at 1540, 1560, even 1600 strikes. So these are the major challenging level for the stock on the near term as well as on the short term basis. So major revival in terms of price will come above 1600 mark only. Until the stock not process above 1600, it may remain for consolidation for some more couple of months. This is the third, fourth consecutive month where we are seeing lower high low formation. That is clearly showing that sustained selling pressure is there in the stock prices. So on the decline, one can buy the stock towards 1450, 1420 zone. That is the area where the good support area for the stock in the decline. Those who wants to buy only on the breakout, then they should wait for the breakout above 1580 or 1600 zone. Then we can see a short-term rally in the stock. But till we are expecting, looking at the behavior, some more consolidation we can see for next couple of months.
All right, let's start taking the questions now. First up, we have a question from Chandra Sekhar, and he's asking about Amara Raja Energy. Now, the stock is in the red today, but has been up about 10% in the last 6 months. He has 10 shares and he got it at an average price of 620, and he plans to accumulate. So what is the target price for the next 6 to 12 months? Pankaj, let's start with you first.
So I think when you look at the traditional battery players, I think things are changing for them because one, overall the demand scenario for autos has been good, and I think more than that, companies are now looking to sort of change their business streams as well. What we like more is Exide Industries with a target price of about 330. Now, Exide has already given a plan for 6 gigawatt kind of a capacity, about 6,000 crore kind of a capex. And I think Amara Raja also has announced a big capex of about, I think, closer to 10,000 odd crores spread over the next 10 years. Now, our sense is that these new energy verticals or the lithium-ion battery space has similar ROCs and similar margins compared to traditional business segments. So one is, I think these companies are sort of changing for better, given the fact that the overall context is or the overall industry dynamics are changing. And we haven't seen much of a price performance in both the stocks. What we like more is Excite, but I think we are actively looking at even Amara Raja because I think we haven't seen much of a price performance. And if they're able to sort of deliver on these expected lines or what they've been sort of stating, I think these stocks look good within the auto ancillary space from a portfolio performance perspective.
All right. Let's take a technical check on this. So what are the cues from the charts are giving?
So since last 3-4 weeks, stock is consolidating very narrow price range, and stock is making support at around for 630, 620 zone, which is very important for near-term setup. Though stock is in a recovery phase, if you look at the monthly chart, the stock is moving up, and since last 3-4 months, we have seen a significant recovery from the recent low. Looking at the overall structure, yes, one can hold the position with stop loss of 620, and once the stock crosses above 665, then possibly we can see another upward target towards 720, 740 on the higher side. So one can hold on their position with 620 stop loss.
Okay. Rajesh, take a look at Jamna Auto because this is a counter that Netra wants to know about. She's looking at the next 6 months as a holding period. She's already holding this at a price of 110. And after we're done with the technical check, Pankaj, I'll come to you on a view on Jamna if we can get one. But Rajesh, what's it looking like on the charts?
The overall structure is bullish. Stock is in uptrend, a series of high top, high bottom formation on the weekly chart. On the daily chart, again, the stock is managed to give breakout of its falling trend line. So I think one can hold on the stock for further more upward momentum as stock is continuously holding above all its short-term, medium-term moving averages. Overall strength is there. The sector is also showing good traction. So we expect that once the stock crosses above 130 zone, then possibly next target in the short term we can see towards 145 to 150 also. So at this moment, yes, hold the position with stop loss of 114 and remain invested for short to medium term perspective.
Okay, Pankaj, any view on the fundamentals? Of course, this is short term, but I guess if any investors are looking to hold for slightly longer than 6 months, what should they bear in mind?
So I think, Alex, this has been a very good company, consistently delivering high ROCs. I think what they're guiding for is, again, a good set of growth coming from non-auto segment. So they are sort of diversifying the risk associated with the volatilities, what you see in auto side. Now, previously we had a buy on the stock. The stock has sort of already run up. I think I need to sort of probably relook at it, whether there is some more juice left or not. But I think overall it's a good stock to be held in portfolio. I think potential upside, I need to sort of come back. I really do not have complete heads up on all the numbers.
All right, Pankaj. Another question is from Saurabh, and he's asking about Utkarsh Small Finance Bank. Now, their quarterly update last week was quite strong. The numbers were quite good. Deposits grew about 19%. Gross loan portfolio rose about 26%. What's your view on Utkarsh Small Finance Bank?
So when you look at the entire BFSI as a space, everything looks attractive, be it a small finance bank or a microfinance. Now, the challenge is that these segments go through good cycles and bad cycles. And which is why when you're sort of playing some of these names through individual names, I think that is where the challenge lies. I think I'll any day prefer a bank which has got some element of this. So, for example, IndusInd Bank has got good or a decent exposure to microfinance side. Obviously, it had its fair share of impact on the bank because the ROEs had sort of come down to below 1 in a down cycle. But now it looks like things are looking good for microfinance or a lot of other BFSI segment. So, which is where if IndusInd Bank is probably on course to sort of say deliver 2% kind of ROAs, and which again opens up the upside on that stock. So I think if you're playing that individual stock, be mindful of the fact that you get the up cycle and down cycle, and that causes good amount of volatility. If you're looking for lesser amount of risk, then I think some of the bank which I mentioned can be looked at.
Just a follow-up to that, just to clarify, I believe that Saurabh was looking at the entire small finance bank space. So Would you say that your answer kind of covers that, Pankaj?
So when you look at small finance bank, most of them are guiding for 25 to 30% plus kind of a growth. Credit cost is not going to be a challenge for next 2-3 years. So this is a good cycle which is sort of panning out. But like I said, you should be mindful of the fact that you sort of exit before it hits a down cycle. Otherwise, you could end up losing some of these gains. And if you're looking for a lot more stabler kind of a return, then like I said, IndusInd Bank is a sort of a good example to sort of look at.
Interesting. Okay, shifting gears then and talking about Finolex Industries, very different segment to play in. But we've got Mehak, who's gotten at levels of 140. The stock price is currently at 225, and it's had stellar returns over the last 1 year. The question, Pankaj, is, and I'll come to you, Rajesh, on the charts as well. But the question, Pankaj, on the fundamentals is, should you hold on right now or should you book some profits?
So, Alex, if you look at the entire sort of piping industry, that has gone through fair share amount of volatility because the PVC prices literally from 80 rupees a kg had sort of jumped to about 160 rupees a kg. So, one point of time, companies had made losses, margins were substantially lower. Now, things are sort of normalizing. I don't have a specific answer for Finolex, but we like the entire piping as an industry. Largely because things are sort of normalizing. When you look at real estate as a cycle, I think after 10 years, you are seeing one of the best pre-sales or overall volume growth. Plus, the pricing has also been on an uptrend, despite the fact that your mortgage rates are at 9% higher. So our sense is that the entire ancillary value chain of real estate, be it piping or be it other segment, should benefit from this. The stock has done well, say, for example, even other companies like, say, Supreme, when you sort of look at. Our sense is that overall you will see more of a sort of a normalized growth in terms of low teen kind of a volume growth plus some bit of a pricing growth going forward. But I think best is yet to come. But given the fact that some rally has already panned out, so probably in a near term, I may not expect a similar price performance for most of the players. I don't have specific answer for Finolex.
Fair point. On the pricing front or on the price action front, perhaps we'll get a view from Rajesh on what to do. What can you tell us on the charts? Should you book some profits is the question.
No, I think I'll hold the position because as the overall structure is looking on the bullish side, and if you look at the weekly as well as the monthly setup, stock is forming a rounding bottom sort of formation. And the kind of accumulation activity we have seen in the lower prices that clearly shows that once we get the breakout above 250 to 55 zone, then this stock can scale up further towards 320 to 350 zone also. So overall structure is looking bullish. So I think one should hold on their investment position at the current level also. Even in the decline also, 200, 195 are the important level again to buy and accumulate this stock. And overall long-term structure is looking bullish. So I think we may see further more run-up going forward in the stock. So one can buy and accumulate the stock at the current price also.
All right. Now, taking our focus to the fertilizer space, Netra has a question and she wants to know if it's a good time to invest in this space. And particularly, she's asking about Chambal Fertilizers and Pradeep Phosphates. So, Pankaj, let's take it to you first. What is your view on the fertilizer space at this point?
So, Smriti, fertilizer as a space, we have not really sort of historically tracked, largely because one, I think the volume growth is tepid, and then you are sort of again exposing yourself to the vagaries of monsoon. What we are sort of liking is some of the companies like, say, Coromandel, which has got a fair share on the fertilizer side. Plus, I think they're sort of evolving their model in terms of using drone to sort of spray fertilizers. So I think I would sort of prefer some of these companies which are sort of looking to change their business models. Otherwise, traditionally, it's a low growth industry with a lot of volatility related to the input prices. So haven't really looked at, neither I am sort of actively looking to sort of consider the space except for the name which I mentioned.
A question on an InvIT. This is Power Grid Infrastructure Investment Trust. Pankaj, any view on this? We've got KN who has a view on YouTube who's bought at levels of 120. It is currently at 100 or thereabouts. Any view on the fundamentals?
So one, we don't have active tracking of the InvITs, but structurally our sense is that InvITs also will tend to benefit if we get higher amount of debt flows, foreign flows in the debt market, because that will sort of structurally lower the debt cost. And we all know that a lot of asset creation is going to happen. So obviously a lot of InvIT route can get adopted. So structurally, it's a good space to be into, but I really do not have any specific to sort of talk on any of the InvITs. We have not been tracking actively any of the InvITs.
All right. Next up, we have a question on CMS Info Systems. Now, just a second, I lost the.
Okay, it's fine. CMS Info System, we've got Saurabh who's got a question on this. And let's first take a technical view. Rajesh, on the charts, how does this counter look?
So this is the fourth consecutive week where we are seeing that stock is making higher low formation. That clearly shows some sustained buying is taking place in the near term to short term basis. The stock is now comfortably holding about 20-day, 50-day moving average. That is also adding up the bullishness on the near term setup. Stock is almost on a verge of giving breakout to its multiple supply zones. So once the stock crosses above 485, 385, 390 zone, then this breakout play will take this stock towards 440, 450 zone also on the higher side. So I think if you've already bought the stock, you can hold on the position with a stop loss of 355.
Okay. Pankaj, do you have a view on the fundamentals for CMS?
Sorry, Alex, don't really track this stock.
Okay, fair point. I've got another question, and again, I'm hoping that you have a view. If not on this, then maybe you can advise on something. As a question is on 5-star business finance, and this is a question coming in from Uppadar Ramudu. He's one of our viewers. He's asking whether you should invest in this. If not, would you have an alternate that you can suggest, Pankaj?
So I think on the small finance side, I've been liking more of tier one banks, and if in order of preference, then I think PSU banks look a lot more structurally positive to us. Really do not track, like I said, a lot of these smaller banks, so won't be able to give a very concrete view on any of these.
On price action then, Rajesh, do you have enough data to talk about 5-star business finance?
So after correction, yes, stock is recovering now, and now stock is trading almost near to its 50-day moving average. Looking at the recovery in the recent past, we expect that if stock continues to hold above 730, 725 zone, then possibly this recovery can extend further. So pullback action is there. So I think 800 is the again supply zone for the stock. So if you want to trade for near-term perspective, you can buy with stop loss of 725. Upside target this is 800 for 5-star.
All right. The next question is on Coal India. Pankaj, let's take a fundamental view on this. Now, I read a note on Nuvama that said that they expect the highest dividends in the next in FY25. What do you think? What are the fundamental? What fundamental view do you hold on Coal India?
So I think on Coal India, our sense is that a lot of these mining companies are doing well, and Coal India, the volume ramp up has been pretty good. And going forward, this is one space within the PSU where the valuations are also sort of attractive with a good dividend yield of 6-7%. Now, our sense is that if the company is able to sort of diversify into new mining areas, which what the government is looking to sort of offer, I think that that could provide furthermore trigger. Otherwise, we are not seeing coal demand being structurally higher because there is hardly any new capacity being put up for thermal power plants. So from that perspective, I think something more needs to happen for this stock to sort of become attractive. Otherwise, dividend yield is good, the valuation is attractive, and then now you have a believability that 1,000 million tons is what they can achieve going forward.
All right, let's take a technical view as well on Ketan's question. Rajesh, what are the charts showing on Coal India?
Very strong structure. We have seen a very strong breakout on the monthly chart. Stock is now giving a breakout of multi-month supply zone. So now stock is trading about to its 2019 swing high. Looking at the price action in recent past, we expect further more upside we can see, and I think one should hold their long position for trading perspective as well as for the short-term investment perspective. Also, we are projecting target of around 345 to 350 in the continuation of this uptrend which we are seeing since last couple of months. One should hold their position with stop loss of around 290.
The last question for the day, we've got Satish Mohan who's written in and asked for a view on Den Networks. He's purchased considering that, okay, I'm not getting what level he bought it at, but the price is currently at around 53 or thereabouts. What's the view, Pankaj, if you have one on the fundamentals?
So I think these DTH or broadband players really do not have much to sort of look at in future, because now you have technology which is again, say for example, when you look at Geo Fiber, Air Fiber, I think these are newer technologies. I think Airtel also has similar offering. And now for you to be a pan-India player, you need deep pockets, which both Jio and Bharti has got. So I really do not see a very longish view for some of these names going forward. I think from a portfolio perspective, Reliance or Bharti will make a lot of sense if because we are already seeing convergence happening because now data is something which is going to drive content. Plus, I think broadband also is expected to be largely driven by these companies only. Otherwise, I think I really do not see a lot of scope for a future for some of these companies, though valuation-wise, balance sheet-wise, they might look okay, but I think you can't really see 10 years, 15 years down the line what these companies will do.
Fair
So
point.
from that perspective, I think Reliance and Bharti look a lot better.
Okay, so switch to a Bharti or Reliance is the advice on the fundamentals. Then why don't we get a technical view as well to close this out, Rajesh? Because he's bought at levels of 50 and he's got quite a large quantity. He's got 10,000 units. So at what level can he look at? It's more or less at his buy price.
So stock is underperforming stock, and yes, some recovery is taking place. But if you look at the longer term, on the longer term time frame, stock is still in the bearish zone. So some recovery is taking place. So he has already bought at 50 rupees. So I think he should now keep his stop loss at around 48 rupees. We can see in the near term, but 60 is the major hurdle on the higher side where he can either book profit or he can again review stock at 60 rupees level where the major supply zone again on the near term basis.
All right. Well, gentlemen, we're completely out of time, but thank you so much, as always, for joining us and for answering all of the viewer questions that came in today. And to you, viewers, a lot of you are thanking us in the comment section. In fact, thank you for tuning in. And it is our pleasure entirely to help you out with your stock-related queries. Remember, we are live through the week at the same time at 11:30. So we'd love to have you back on the show as well. That's all we have on this edition of Ask BQ though. Thanks so much for joining in. This is BQ Prime.